The unique three-river bottom candlestick pattern is a vital tool in the analysis of financial markets, specifically for identifying potential bullish reversals. This pattern consists of a sequence of three specific candlesticks that signal a shift from a downtrend to an uptrend. Recognizing this pattern allows investors to anticipate a potential increase in asset prices, making it an essential component of market analysis. Investors are encouraged to integrate the unique three-river bottom pattern into their market analysis toolkit. This should be complemented by continuous learning and keen market observation to hone the ability to spot this and similar patterns. Mastery of candlestick pattern analysis is not instantaneous. It requires patience, practice, and perseverance. Understanding and applying candlestick patterns like the unique three-river bottom can significantly enhance trading decisions. Therefore, it is important to remain patient and persistent in learning and applying these techniques. The journey to becoming proficient in candlestick pattern analysis is challenging but rewarding, offering the possibility of improved investment outcomes. Candlestick patterns are a crucial part of financial market analysis, offering insights into market sentiment and potential price movements based on historical performance. These patterns are formed by the price movements of an asset within a specified time frame and can indicate the continuation or reversal of trends. Among the various candlestick patterns, the mat hold pattern stands out as a significant bullish continuation pattern. This pattern suggests that, despite some selling pressure, the prevailing uptrend is likely to continue. To identify a mat hold pattern, look for a strong initial bullish candle, followed by a series of smaller candles that trend downwards or sideways, but do not significantly erode the gains of the first candle. The pattern is completed with another strong bullish candle, ideally taking prices to new highs. This formation signals that buyers have regained control after a brief consolidation, suggesting that the upward trend may persist. Understanding the mat hold pattern involves recognizing the importance of the consolidation phase within an upward trend, as it often precedes the continuation of bullish momentum. Investors and traders view this pattern as an opportunity to join the trend or add to their positions, anticipating further price appreciation. The mat hold pattern, like other candlestick formations, requires confirmation and should be used in conjunction with other analysis tools for the best results. The mat hold candlestick pattern is a configuration observed on candlestick charts, an essential tool for traders analyzing the price movements of securities. This pattern specifically signals a continuation of a bullish trend, indicating that the upward momentum in price is likely to persist. To understand this pattern, it is crucial to recognize its composition and what it signifies about market behavior. Composition of the mat hold pattern. 1. It starts with a long bullish candle, which shows a significant rise in price from open to close. This candle is an indicator of strong buying pressure and sets the stage for the pattern. 2. The following are a series of small candles. These candles can be both bullish and bearish, displaying a consolidation phase or a slight pullback in price. Despite the small movements, the prices stay within the range of the first bullish candle. There are usually 3 such small candles, but the exact number can vary. 3. The pattern is completed with another long bullish candle. This final candle confirms the continuation of the upward trend by closing at a new high, well above the first bullish candle. Significance in bullish market momentum. The mat hold pattern signifies that, Despite short-term consolidations or minor pullbacks, the bullish sentiment remains strong in the market. The initial surge is followed by a period where buyers and sellers are in a tug of war, but the market sentiment does not turn bearish. The concluding long bullish candle indicates that buyers have regained control, pushing the price even higher. This is seen as a strong signal that the existing uptrend is likely to continue. Visual representation in uptrends. Imagine the pattern on a chart during an uptrend. The first long bullish candle rises steeply, representing a day of strong gains. Following this, the market enters a brief consolidation phase where price movements are limited and reflect indecision. These are the moments captured by the small candles. Finally, a surge of buying pressure propels the price upward, forming another long bullish candle. This sequence visually emphasizes the continuation of bullish momentum, suggesting that the uptrend is robust and likely to persist. Understanding the mat-hold candlestick pattern helps traders to make informed decisions about holding onto their positions or entering new trades, anticipating further gains in a bullish market. It underscores the importance of recognizing patterns that signal the persistence of an existing trend amidst the daily fluctuations in the market. The mat-hold pattern in technical analysis is a bullish continuation pattern that signifies the potential continuation of an existing uptrend. It is recognized by a specific arrangement of candlesticks, which include a long bullish candle, followed by 3 smaller bearish or bullish candles, and concluded with another long bullish candle. Importantly, the colors of these candles play a critical role in identifying the pattern. The first and last candles should be green, indicating upward price movement, while the middle 3 candles can vary in color, depicting a period of consolidation after the initial price surge. One of the defining characteristics of the mat-hold pattern is the presence of gaps between the candles. Typically, there is a gap up between the first and the second candle, emphasizing the strength of the bull market. These gaps are essential as they indicate a strong buying interest that continues despite the consolidation phase. The significance of recognizing the mat-hold pattern within the context of a prevailing uptrend cannot be overstated. For this pattern to be considered a valid continuation signal, it must appear during an established uptrend. The initial long bullish candle confirms the existing bullish sentiment, while the subsequent consolidation suggests that sellers do not have enough strength to reverse the trend. The final long bullish candle then indicates a resumption of the uptrend. To fully appreciate the mat-hold pattern, it is helpful to examine chart examples across different market conditions and time frames. Real instances of the mat-hold can show how it manifests in various sectors and asset classes, from stocks to commodities. Observing these examples, one can note the pattern's occurrence during significant uptrends, marking periods of slight hesitation before the upward trend resumes. Such examples further reinforce the importance of context when identifying and interpreting the mat-hold pattern, underscoring it as a potent indicator of continued bullish momentum. The mat-hold pattern plays a significant role in indicating market sentiment and the psychology of traders, primarily reflecting a sustained bullish optimism. When this pattern appears on the chart, it essentially signals that despite minor sell-offs or periods of consolidation, the overarching momentum in the market remains positive. This is depicted through a strong initial bullish candle, followed by a few smaller, often mixed candles, and then another large bullish candle that closes at a higher point than the first. This formation showcases the resilience of buyers in the market, who are not deterred by short-term fluctuations and are confident in the asset's potential for further gains. Understanding the market sentiment and psychology behind the mat hold. At its core, the appearance of a mat hold pattern is a testament to the underlying strength of buyer conviction. The initial strong bullish candle indicates significant buying interest, which is not entirely offset by the subsequent smaller candles. These smaller candles represent a brief period where sellers try to push back, but without enough conviction to reverse the trend. Finally, the closing large bullish candle asserts that buyers have regained control, ready to propel prices even higher. This dynamic is instrumental in illustrating the depth of optimism among traders, underpinning their belief in the asset's value. Influence on trader decisions and market uptrend continuation. The recognition of a mat hold pattern can significantly influence trader decisions, bolstering confidence in the continuation of the uptrend. Traders observing this pattern might interpret it as a robust signal to either enter new positions or hold onto existing ones, anticipating further price appreciation. The key takeaway from the mat hold pattern is not just its portrayal of ongoing bullish sentiment, but also its potential to serve as a catalyst for prolonging uptrends. As more traders align their actions according to the optimism suggested by this pattern, their collective moves can amplify the existing trend, creating a self-fulfilling prophecy that drives the market even higher. In summary, the mat hold pattern offers a vivid depiction of sustained bullish sentiment in the market, highlighting traders' confidence in the prevailing trend. Its presence reassures traders of the continuing uptrend, encouraging actions that further fuel market momentum. This pattern serves as a valuable tool for understanding market psychology, enabling traders to make informed decisions based on a deeper insight into the prevailing sentiment. The mat hold pattern is classified as a bullish continuation pattern because it signals that an existing upward trend is likely to continue. This pattern typically appears in a chart where there is a clear upward trend, demonstrating the market's resilience and inclination to maintain its bullish trajectory. To better understand, let's visualize an example from historical price movements, keeping in mind the limitations on using specific imagery. Imagine a stock chart where the price has been climbing over the past few days. The mat hold pattern would begin with a long bullish candlestick, followed by a small downward drift represented by a few smaller bearish candlesticks, which do not significantly reverse the previous gains. These smaller candlesticks are contained within the range of the first bullish candlestick, indicating that the sellers do not have enough strength to reverse the trend. Finally, another long bullish candlestick appears, confirming the continuation of the trend. This final bullish candlestick is crucial as it reassures investors and traders of the market's strength and potential for further upward movement. By comparing similar patterns across different charts, one can see instances where the mat hold pattern accurately forecasted the continuation of bullish trends. For instance, a stock experiencing a consistent uptrend might pause briefly, forming a mat hold pattern before resuming its upward movement. This continuation confirms the pattern's role in trend confirmation, acting as a signal for traders to possibly remain in or enter new long positions. In essence, the mat hold pattern serves as an indicator that the bullish sentiment in the market remains strong, despite temporary periods of consolidation or slight retracement. Its appearance amidst an ongoing uptrend reassures investors of the likelihood that upward momentum will continue, making it a valuable tool for confirming the persistence of bullish market conditions. To understand the predictive power of the mat hold pattern in technical analysis, it is crucial to consider additional indicators such as the volume during and after the pattern's formation, the strength of the preceding trend, and how prices react following the pattern. These elements play a significant role in either reinforcing the pattern's reliability as a continuation signal or in signaling the need for caution. Increased volume during the pattern's formation and immediately after it can act as a validation signal. A surge in volume suggests a strong market interest in the direction indicated by the pattern, thereby increasing its reliability as a continuation signal. On the other hand, if the volume does not significantly increase, it may signal a lack of conviction among traders, which could mean the pattern is less reliable. The strength of the preceding trend is another vital factor. A mat hold pattern forming after a strong trend is more likely to indicate a true continuation of that trend. The rationale here is that a well-established trend has the momentum needed to overcome minor corrections or consolidations, such as those represented by the mat hold pattern. However, if the preceding trend is weak or lacks clear direction, the pattern's predictive power may be questionable. Finally, the reaction of prices following the pattern is critical in assessing its effectiveness. If the price continues to move in the direction indicated by the mat hold, it confirms the pattern's predictive reliability. A swift and decisive move in the indicated direction reinforces the continuation signal. Conversely, if the price movement is hesitant or reverses, it raises doubts about the continuation and suggests that traders should proceed with caution. In conclusion, while the mat hold pattern is a useful tool in predicting market continuation, its reliability must be assessed in conjunction with other indicators. Increased volume, a strong preceding trend, and a positive price reaction following the pattern significantly enhance its predictive power. However, the absence of these supporting indicators suggests that traders should approach the pattern with caution. The mat hold pattern is recognized in technical analysis as a signal for bullish continuation, indicating that an uptrend in the market might continue after the pattern's formation. Its structure consists of a strong bullish candle, followed by a series of small candles that trade within the range of the first candle, and concludes with another strong bullish candle. The reliability of the mat hold pattern in predicting market movements is considered to be moderate to high, with its effectiveness hinging on the prevailing market conditions and volume support. Successes of the mat hold pattern are often observed in markets with discernible trends where the pattern acts as a pause before the continuation of an uptrend. This makes it a valuable tool for traders seeking to capitalize on sustained upward movements. However, the mat hold pattern has limitations. Its occurrence is less frequent compared to other candlestick patterns, which might limit opportunities for its application. Additionally, without significant volume supporting the successful candles that form the pattern, its predictive power may diminish. Given these successes and limitations, it becomes crucial to corroborate the signals generated by the mat hold pattern with other forms of technical analysis. Incorporating additional indicators such as moving averages, relative strength index (RSI), or volume data can enhance trading decision confidence. For instance, a rising moving average or a favorable RSI value can confirm the bullish sentiment suggested by the mat hold pattern, providing a stronger basis for expecting a continuation of the uptrend. In essence, while the mat hold pattern holds valuable insights into potential bullish continuations, its historical reliability improves markedly when combined with other technical analysis tools. This complementary approach enables traders to make more informed decisions by validating the strength and potential of the pattern's predictive signal. Integrating the mat hold pattern with other technical analysis tools can enhance the understanding of market sentiment and improve the precision of entry and exit points in trading. Here's how one can combine the mat hold pattern with tools like Relative Strength Index, RSI, Moving Average Convergence Divergence, MACD, and Fibonacci retracements for a more nuanced trading strategy. First, when a mat hold pattern is identified, indicating a potential continuation of a bullish trend, traders can use the RSI to assess whether the asset is overbought or oversold. If the RSI indicates the asset is not yet overbought, typically below a value of 70, there may be room for the trend to continue, supporting the bullish signal from the mat hold pattern. Second, incorporating the MACD can provide further confirmation of the trend's direction and strength. If the MACD line crosses above the signal line around the time the mat hold pattern forms, it suggests that upward momentum is increasing, which aligns with the continuation signal from the mat hold pattern. This confluence can offer traders more confidence in the bullish trend. Lastly, Fibonacci retracements can be used to identify potential levels of support and resistance following the formation of a mat hold pattern. By drawing Fibonacci levels on a chart, traders can identify where prices might retrace before continuing the trend. The alignment of a fib level with the pullback in a mat hold pattern can serve as a robust support level, offering a strategic entry point with a clearer risk-reward ratio. For example, a successful integration could look like this. A trader observes a mat hold pattern forming in an upward trend. The RSI reads below 70, suggesting the trend has not reached overbought territory. The MACD shows a bullish crossover, reinforcing the upward momentum signal. Finally, the price pulls back to a significant Fibonacci retracement level, which holds as support. Combining these signals, the trader decides to enter a long position at the fib level, with a stop loss just below, targeting further gains as the upward trend continues. Combining these technical tools can lead to better informed trading decisions by providing multiple layers of confirmation, thereby reducing reliance on a single indicator and potentially increasing the success rate of trades following the identification of a mat hold pattern. Common errors and misconceptions about the mat hold pattern often stem from insufficient experience or knowledge in pattern recognition within the trading sphere. One frequent mistake is misidentifying the mat hold pattern, as it shares similarities with other patterns, leading traders to incorrect conclusions about market direction. Proper identification requires an understanding that the mat hold pattern is a bullish continuation pattern, suggesting that after a brief consolidation, the prevailing trend is likely to continue. Another common misunderstanding arises from overlooking the pattern's rarity and the significant market context. For the mat hold pattern to be reliable, it should appear within a clear uptrend, with the initial strong bullish candle followed by a series of smaller, typically bearish, consolidation candles. The failure to recognize these candles' role in the pattern can lead to premature or misguided trades. Furthermore, traders often neglect the importance of confirmation. A mat hold pattern is confirmed when a subsequent candle closes above the consolidation, signaling the continuation of the uptrend. Acting without this confirmation can result in false starts and potential losses. Moreover, reliance solely on the mat hold pattern or any individual pattern without considering other technical indicators and analysis methods can limit the understanding of the market's broader context. It is crucial to employ additional analysis tools such as volume indicators or moving averages to substantiate the pattern's implications. This complementary analysis helps in verifying the strength of the trend continuation signal provided by the mat hold pattern. In summary, to effectively utilize the mat hold pattern in trading strategies, it is essential to develop a precise approach to pattern recognition, understand the pattern's context within the broader market trend, wait for confirmation before taking action, and complement pattern analysis with other technical analysis tools. This comprehensive approach aids in minimizing mistakes and misinterpretations, enabling traders to make more informed decisions. Leveraging the mat hold pattern in trading involves identifying this bullish continuation pattern and using it to make informed decisions about entry and exit points, alongside considerations for stop-loss placements and profit targets. Here is a detailed outline of actionable strategies. Entry points. Traders look for the mat hold pattern to occur in a prevailing uptrend. The pattern starts with a strong bullish candle, followed by a series of small-bodied candles that trend downward slightly, without significantly pulling back the initial gain. The concluding part of the pattern is another strong bullish candle. Entry is considered ideal after the formation of the final bullish candle, confirming the continuation of the uptrend. Exit points and profit targets. Setting exit points or profit targets with the mat hold pattern involves measuring the initial rise before the pattern formation and projecting an equivalent or partial rise post the pattern formation. Traders might set a profit target based on this projection. Alternatively, observing resistance levels that align with these projections can also serve as potential exit points. Stop-loss placements. A prudent stop-loss strategy for a trade based on the mat hold pattern involves placing the stop-loss just below the lowest point of the small-bodied candles within the pattern. This placement ensures that the trade is protected against the risk of the pattern failing and the market moving against the bullish expectation. Anecdotes or case studies. A notable case study involves a trader who observed the mat hold pattern on the daily chart of a tech stock during a period of market optimism about technology investments. Recognizing the pattern, the trader entered a long position after the confirmation candle and set a profit target that was equal to the height of the initial bullish candle before the pattern. The stop loss was set just below the lowest of the small-bodied candles. Over the next few days, the stock resumed its bullish trend, allowing the trader to reach the profit target and secure a favorable return. In summary, the mat hold pattern represents a valuable tool for traders looking to capitalize on continuing upward trends. By carefully considering entry and exit points, aligning profit targets and stop-loss placements with the pattern's structure, traders can effectively use this pattern to enhance their trading decisions. Successful application of these strategies requires attention to market context as well as disciplined risk management. The mat hold pattern is a bullish continuation pattern that signals a potential continuation of the market's current upward trend. It is characterized by a strong up day, followed by 3 small body days that are contained within the range of the first day, and completed by another strong up day. To understand its implications and adapt strategies accordingly, traders often look at variations or related patterns that share similarities with the mat hold pattern. Here are some known variations and how they differ in terms of formation and market implication. Rising 3 methods. This pattern shares a family resemblance with the mat hold pattern, but is typically shorter and involves a clearer sequence of 3 small down days followed by a conclusive up day. The rising 3 methods pattern starts with a long candlestick on an up day, followed by 3 smaller down days that are contained within the range of the first day, and concludes with another long up day that closes above the first day's close. The key difference is in the direction of the 3 small days, suggesting consolidation within an uptrend rather than varied indecision. Traders might interpret this pattern as a more straightforward signal of bullish continuation, given its structured consolidation phase. Falling 3 methods. As the bearish counterpart to the rising 3 methods, this pattern signals a continuation of a downtrend rather than an uptrend. It consists of a long down day, followed by 3 small up days contained within the range of the first day, and ends with another long down day. Though it is a bearish pattern, understanding its structure helps traders recognize the symmetry and rationale behind continuation patterns in different market conditions. When it comes to adapting strategies based on these patterns, traders might look for chart examples where these formations have successfully predicted continuation moves. For the mat hold and its variations, it's essential to pay attention to volume during the pattern's formation, as increasing volume on the concluding long day can affirm the pattern's reliability. Additionally, traders could use supplementary indicators such as moving averages or momentum oscillators to confirm the market's direction before making a trade based on these patterns. In visualizing these patterns through chart examples, imagine the first and last days as strong indicators of market sentiment, tall and reaching upward in the case of bullish patterns, with the intervening days like a short breath before the market continues its course. These distinct features underline the importance of patience and confirmation in trading strategies, as recognizing the setup and waiting for its completion could significantly enhance trade outcomes based on these continuation patterns.